The good and the bad. Welcome to today's mortgage market update for October 20th, 2022. We are going to go ahead and share some screens today because I want to show you some charts. So let me just get to that. There we go. Okay, so let's talk about what's going on in the market. Last week we got CPI out, the Consumer Price Index. Remember, this measures inflation on a consumer level. Now you are seeing a month over month chart here in front of you. And the important thing to know is the overall inflation remained at 8.2%. Remember, we take off the last September's reading. This September right here drops off when you add the new September on. Now, what we dropped off and what we added on were both 0.4, so it remained the same. And the thing that we really need to look at is core inflation, because this is what the Fed is using when they're looking at, do we raise the federal funds rate or not? And if you remember from previous market updates, I told you our biggest issues was July, August, and September, because see this dip here in core inflation last year, that was something we were going to have to get over this year. Now, again, we dropped off September of 2021, which was zero point 0.3, and we added September of 2022, which was 0.6. Core inflation did come out higher than expected last week, and that helped push the fact that the Fed is at like a 76, I think, percent probability that they are going to raise the federal funds rate on November 2nd by 75 basis points. So expect that to come. And we are also expecting it to be another 75 basis points at the Fed meeting on December 14th. And there is the core inflation and the headline inflation. You can see them both side by side there, and how headline remained the same and core continued to increase. Now, I do want to point out that yesterday we got the housing market index. Now, this measures builders' confidence. Any number that's above 50 is considered an expansion market. Anything that's under 50 is considered a contracting market. When the numbers came out for October from builders, this was our 10th straight month of builders' sentiment, builders' confidence going down. We were at 46 points last month, and this month we are at 38. So builders are concerned that their confidence is falling because of the interest rates and pricing. People are walking away from contracts, so that's important for them to note. The other important thing to note is housing starts. So you can see in this chart right here, we have housing starts at negative 8.1%. It's important to note that this first number here, where it says starts, includes things like multifamily homes. It's the number below it that we really care about, single family starts, and they were also down 4.7% and 18% year over year. But reality is, we don't really care about starts because you can't live in an empty hole. You can't live in the house until it's finished. So what we care about is completions. Now, completions right here, we're at 6.1%. And that is up 15% year over year because, as we know, the supply chain has gotten a little bit better. It's still having issues, but it's gotten a little bit better. And we are expected as a nation, in the US here, to complete 1.73 million households this year. The problem is household formations is at 1.6, 1.7. So we are not keeping up with household formation. We are still falling behind every year, every month, just continuously. And don't forget, it might only be 1.6, 1.7, but you also have to add an additional 100,000 to that because we lose houses due to fire, destruction, tear down, that kind of thing. So we are continuing to remain in the negative on housing, and it's going to remain tight. It's always important to look at mortgage applications. Mortgage applications are at a 25-year low, and that's because rates are at a 20-year high. And if you look here, the overall mortgage applications were down 4.5% last week. Purchases were down 4% last week and 33% year over year. Refinances down 7% last week and 86% year over year. And it's important to note that the average interest rate last week was 6.94%, when a 1 year earlier, or 6.94%, which is a whole 3.75% higher than where we were 1 year previous. And keep in mind, these rates as a national average, it doesn't show you the average points that people are paying to get those rates. So those rates are only when people paid points. And today, existing home sales came out. So I just want to point out a couple things here. Existing home sales were down 1.5%, but we were expecting a number that was negative 3.5%. So it actually came out better than anticipated. We are still down 23.8% year over year. Median home price was down 1.2% month over month, meaning that the average home price has fallen in the past month. The average home price now is $385,000. That is on a national level and is up 8.4% year over year. What's also important to note here is just because this number fell a little bit does not mean home prices are actually declining. It could just be that certain segments of the market were buying more homes in the past month. For example, first-time home buyers could have been buying more homes, and therefore that helps skew the number down a little bit. So don't get too concerned in the fact that that's down just a little bit. And the other thing we like to look at is inventory. And 1.25 million units were listed in inventory, which is a 3.2 month supply. A normal market is actually 4.6. You're going to hear in the news and from a lot of experts, right, that a normal market is a 6-month supply of inventory, but that's actually not true. If you take a look at the past 20 years pre-pandemic, because let's be honest with that, pre-pandemic, the last 20 years, the normal market was actually 4.6 per month of inventory. So it is less than the 6% you're going to hear from a lot of people out there. Inventory is cresting. I'm going to show you that chart next. And you have to remember, when you see inventory of 1.25 million, there's only active listings of 732,000. The other 518,000 are already under contract, which makes 41% of the inventory under contract, and it's normal to have 25% under contract. And when you figure that into it, it's actually 1.9 months of supply on the market right now, which definitely makes this market a tight inventory, and it's going to remain that way. Okay, and the last chart here I wanted to show you was existing inventory. And inventory has fallen this month, as we just said, and you see this crest here, but that's normal. If you were looking earlier this year, everybody's like, inventory's up, inventory's up. And yes, it was up compared to where we were. But by looking at this chart, we capped right about where we did last year. So we didn't get this big boost that everybody made you think that we were getting. And I just like to remind people, are interest rates really high, or are they just back to normal? And reality is they're just normalizing. If you take a look by decade, going back to 1970, where interest rates were, we're really just normalizing. It's not that our interest rates are high. So keep that in mind if you are looking to buy a home or you're talking to somebody. It's not that they're high, it's just that they're normalizing. So I'm Rebecca Foote from the Rebecca Foote Mortgage team. If you have any questions, please don't hesitate to reach out to us. We would love to talk to you and get you pre-approved for a house. And you can reach out to us at any time with any questions. We are here to help you out. Let me just throw our phone number up here. There you go. And there's our phone number and my website. And I hope you all have a great rest of your day.